blockchain peut aider la création des entreprises, la création des cryptos, mais est-ce que la blockchain peut sauver la planète? On demande cette question dans le prochain panel. Blockchain for enterprise and sustainable development goals is what we're talking about avec le modérateur. C'est encore Olga Yaroshevsky, chef de content avec le groupe NexChange. Also on the panel, we welcome Matthew von Niekerk, who is the CEO of SettleMint. We also welcome to the panel Aiaze Mitha, who's the digital finance and sustainability expert with GIFT Gift. Also Aaron Powers, co-founder and CEO of Hunit, and Robert Allen, who is the entrepreneur in residence with eftpos Australia. And with that, we are off to save the planet.
Hello everyone, I'm Olga Yaroshevsky. I'm head of content for NexChange Group and Africa Blockchain Week. Happy to welcome you to our virtual summit. It's my honor to moderate a session today on my personally favorite topic, blockchain for enterprise and sustainable development goals. Happy to be here with y'all, and I have an esteemed panel of amazing experts today and would like to now give the floor to you guys. Please introduce yourself, what you do, and what are your goals and interests in blockchain. Matthew, let's start with you. Where are you calling from, by the way?
Yeah, I'm calling in from Belgium, a town called Leuven, just about 20 kilometers east of Brussels. So yeah, that's so my name, Matthew van Niekerk. I'm originally from Canada, lived in Japan for about 7 years, now in Belgium for many years. And my entry into the blockchain space started in around 2014. I was working at a bank at the time and started a center of excellence for blockchain technology, and found after several proof of concepts and pilot applications that we were launching that there are a set of repeated challenges that enterprise and banks and enterprise in general face with adopting blockchain technology. So in 2016, I had the light bulb went on, and I thought, okay, if every bank or every company or every organization or ecosystem that wants to use blockchain tech is going to face a set of predicted repeatable challenges, well, there's a product that can be built there, and that's exactly what we do. We've built a low-code platform for building blockchain applications, essentially a blockchain platform as a service. So we've been at it since 2016 as a company, active in Europe, of course, where our headquarters is, Dubai, as well as India and Singapore for the APAC region. So short intro for myself and for SettleMint. Thank you for having me here today.
Thank you so much. Amazing. Rob, here's to you.
Yeah, hi everybody. My name's Rob Allen. I'm currently the entrepreneur in residence at eftpos Payments Australia, but I'm also a consultant for emerging technology in the area of sustainable development goals. My blockchain journey goes back maybe 7 years. 2014, 2015. I was working at a bank in Scandinavia called Moderator. We were looking at ways of building payment systems and looking to R3 Corda for enterprise payment solutions. Being a payments guy, I kind of went down the rabbit hole, started looking at Bitcoin and other blockchain solutions to solve some of the key interests in my life, which were financial inclusion. Banking the unbanked and enabling the migrant workforce around the world to remit their money home cheaply and safely. And from there, I got into things like renewable energy, into sustainable development, circular economies, and ultimately digital identity, which is at the core of everything that we need to do, I believe, in blockchain and distributed ledgers. At eftpos here, I'm on the governing council of Hedera Hashgraph. So we joined the Hedera governing council earlier in the year. And as a next generation blockchain or distributed ledger technology, we're using that to some of its beneficial features like its speed and its scale to look at things like micropayments. And micropayments are another foundational technology, I believe, for things like smart cities and circular economies. So lots of really exciting things going on in this space, and I'm happy to share it with you here today.
Thank you so much. Aaron, please.
Great. Thank you as well for having me on this panel. I'm excited to be here. My name is Aaron Powers. I am CEO and co-founder of a company called Hunit. Our journey started in very late 2018. Myself and my co-founder, I think like many here, asked themselves, what does the future of X look like in a decentralized economy space? And what our X was financial services. We started to kind of look at it from a service model and realized that there were a lot of tools that we needed that were missing. And it didn't take very long for us to kind of get our light bulb moment, which is these tools are going to be useful for any participant in the distributed ledger space. And particularly our focus is on private market investments. So what's commonly referred to as alternative assets. And so what Hunit does, we have a no-code platform that basically is a full ecosystem as would be required for legal professionals to be able to create natively digital investment or financial agreements that allow for completely digitalized, let's say management and flows inside of the alternative asset space, which is about £1 trillion a year of newly issued private market investments that are today being done either on paper, real paper, or a digital facsimile of paper such as PDF. And so this is kind of finance's great final holdout for analog instruments. And we're looking to revolutionize that. For us, how this interacts with the sustainable development goals is that we have a number of tool sets in there. Some of them basically we allow for a more transparent style of business regarding these types of investment agreements. And we also help relieve the burden of court-based adjudication for a number of types of breaches that we've been able to basically technify the solution for. And so when it comes to developing countries and the realities of doing business there, certainly in a world where you have over £1 trillion of negative yielding debt, investors are looking for access to exciting deals. And the developing world offers some of the best of those. I mean, it's right in the name there, developing world. So, but the challenge has always been, I think, accessing, Western capital or let's say having the developing world access Western capital has proven to be full of some challenges around local business culture, around the quality of local institutions. We feel that the technification of a lot of these types of relationships and the management thereof is a great solution for allowing increased foreign direct investment in places like Africa, and overall improving the general business environment for private market investments in the space.
Amazing, thank you. And last but not least, Ayaz, please, here's to you.
Thank you very much, Olga, and thanks for inviting me to this panel. Hi, everyone. My name is Ayaz. I come from the fintech space. I've been working in fintech in developing economies for about 20 years now across 50 markets, focusing on different aspects of fintechs, from financial inclusion to their impact on sustainable development. And more recently, I've been advising the UNSG's Secretary General's Task Force on Digital Financing and the SDGs, where we looked at the many different ways in which fintechs could actually accelerate the achievement and the attainment of the SDGs. And since then, I've been leading a number of pieces of work within the UN that really focus at the nexus of fintech and sustainable development in many different ways, looking at organic, emerging fintech innovations in developing economies, but also obviously looking at blockchain and the potential that blockchain has for addressing a number of SDG-related challenges, including climate and environmental challenges increasingly, which are really interesting. And obviously also looking at global fintech platforms that emerge from social media, from e-commerce, and from other businesses in really looking at their cross-border spillover effects on the SDGs as well. So I'll tell you much more about that during the course of the conversation, but really excited to be here today with all of you. Over to you, Olga.
Thank you. Well, actually, I would like to stay with you and go back to what you just said. So I read the latest report by the Task Force on Digital Finance. It is called ambitiously People's Money, Harnessing Digitalization to Finance a Sustainable Future. Can you please give us some highlights here? Because I feel it's really relevant to the topic of our conference. What has been the most important outcome of your work there for SDG?
So I think there's two important outcomes. Thanks for the question. I think one of them was that fintech innovations and digitalization is really transforming the financial space. And if we really want to make it work for the SDGs, we need to make it work for the people, because in the end, the whole money in the financial system, whether you're looking at private finance and financial capital markets, or if you're looking at public finance, is people's money in the end. Public institutions and private institutions are just intermediaries of that money. And so if we align finance with people's interests in the kind of future they want to be investing in, we would be able to make money work for the SDGs. So that's sort of one aspect of the recommendations that was important. The other thing I think that was important is that we reached some conclusions, some recommendations that we actually packaged in 3 key areas. One is to look at what are the catalytic opportunities? Where is it that fintech can really make a difference in accelerating financing for the SDGs? And we looked at, obviously, how do you enable financial and capital markets to actually improve their risk assessment and impact measurement through fintechs? We've looked at transparency in public finance. We've looked at how fintechs are enabling SME growth and SME financing through innovative mechanisms for credit decision making, etc. We've looked at how fintech also allowed to align consumer consumptions with sustainable development in many different ways. And we've looked at some innovative ways in which fintechs can actually also help us really rethink the financing of sustainable development goals and development finance in some ways. For instance, how could you harness the growing pool of domestic savings? We are talking about $23 trillion of domestic savings around the world. How could you harness that pool to actually make it work for financing the SDGs through fintech innovations? So there's a whole area of recommendations that really looks at those catalytic opportunities. We've also looked at governance, because obviously good governance is going to be important. Fintechs will not automatically result in a positive SDG impact unless it's supported by good governance. We see a lot of positive, but also a lot of negative impact. And so there's a lot of trade-offs to navigate. And my last point will be that we've also looked at ways in which countries now and developing economies could actually align how they think about and how they shape their fintech ecosystems in support of their national priorities. There's a lot of potential. Let me just give you one example. In Bangladesh, there's a need for $20 billion to fund sustainable infrastructure projects for the next 2 years. Well, traditionally, most of that money is actually borrowed through international and financial capital markets, which obviously comes with Forex exposure, with interest rates. It's also coming from government to government lending. One approach could be to actually tap into domestic savings. There's over $20 billion of domestic savings in Bangladesh, distributed across small amounts and small accounts with small amounts of deposits. And so fintech innovation can actually help you effectively aggregate that, pull it together, and through innovative financial instruments, actually deploy that money into sustainable infrastructure investments that allows people to actually be investors in it, to get distributional effects through receiving dividends. It's all in local currency, so no Forex exposure, and people get the benefit of use. And so there's many ways that we've tried to advance in which fintech can actually really transform the way we think about the SDGs. I'll just pause here. I don't want to be too long. I'm sure we're going to come back to other topics. So over to you, Olga. Thanks.
Absolutely. Thank you. Well, if anyone has any comments or questions to Aiaze, this is a very interesting point. Anyone? Okay. Actually, I would like to follow up with a question that Matthew was kind to send in advance and ask them to his fellow panelists. So Ayaz, Matthew asks what best practices from the developing world could be replicated to the industrialized world, and what best practices could be exported?
Well, that's a very tough question. Thank you, Matthew. Listen, there's a lot of innovation that's actually emerging from developing economies, and we've seen that through the wave of mobile payments. And I think Rob was speaking about mobile payments a little bit earlier. He comes from that space. I'm sure he'll have a lot of interesting comments. But if you look at what's been happening in mobile payments in general, a lot of the innovation has actually come from developing markets and developing economies, driving not only inclusion, and of course, with inclusion, poverty reduction, but also driving economic growth by enabling new innovative models for providing credit to SMEs, to also driving the build out of infrastructure in a sense. And so there's a lot of, and what could be learned from that is that, when you give people the space to innovate, when you create that policy and regulatory incentive for them to innovate through not just policy stimulations, but also tax incentives, fiscal incentives, supporting infrastructure with RegTech, SupTech, with incubators, accelerators, sandboxes, etc. There's a lot of positive, impactful innovations that can emerge from local communities. So it's really a way of nurturing sort of bottom-up organic innovations. So I think there's a lot to be learned in that sense. There's a lot of developments, I would say, in the way in which fintech actually enable access to capital-intensive utilities. It's in emerging markets that we have seen emerging pay-as-you-go models that allow people to pay in fractionalized installments for access to capital-intensive utilities and services, such as, for example, access to clean energy, which is solar powered. And so there's a lot of innovations that play a key role in the clean energy transition as well, and in climate adaptation and mitigation that actually come from developing economies. And so there's a lot to be learned from there to inform how we address that in more mature markets and how we think about policies and regulations in more mature markets. Very often we think about financial stability, market integrity, consumer protection, but we fail to embrace the broader SDG impacts of those fintech innovations. And in developing economies, one of the focus is not just on financial integrity and stability, but also on the development impacts. Because it's so important to the trajectory and the growth of these economies. And so I think that's one key lesson or key learning that I think we can probably learn from developing economies in the way we look at things. Today, we tend to have these broad discussions on big tech, for instance, looking at competition-based solutions or antitrust-based solutions. But we are not really looking at their broader positive and negative effects and impacts on sustainable development. And that should be part of the equation and the picture and how we think about these topics. And that, in my view, comes a lot from developing economies.
Matthew, I hope you're
I missed my cue at the beginning, but no, thanks a lot. That's is a fantastic answer, and I'm happy to. Very encouraging to hear the insights that you shared. Thank you.
Matthew, here's to you now. So did SettleMint work on any projects directly related to sustainability?
Yeah, definitely. There's a lot of interest in sustainability. Well, ESGs are on the top of every board's agenda these days. So we focus a lot in the enterprise space, and we've worked on a couple to note. I'll just mention three of them. I think one is more related to financial inclusion, and that's an initiative we did with the Islamic Development Bank. It's already going back quite a few years, but that was a subsidy distribution platform for member countries of the Islamic Development Bank. So creating a model where you can create tokens, programmable cash that can be distributed to the wallets of intended recipients, and whether that's subsidies for the purpose of food consumption or subsidies for the purpose of fuel, for example, or whatever the purpose might be. You can, as it's a programmable token that represents fiat, you can make, on the one hand, keep it stable, on the other hand, define what purposes it can be used for. So really targeting subsidy distribution so that the impact that, in that case, the government agencies that are issuing subsidies, or the Ministry of Finance that's distributing the subsidies, has the ability to really target what they're doing and ensure that the money is really being spent where the policy dictates it should be being spent. So that's one example. Another one I would say is around education. We worked with an NGO that's called Via Don Bosco. So Via Don Bosco provides funding to around 117 schools in 20 different countries across Africa and Latin America. And what they found is that, well, the way that they were operating, there were a lot of very paper-based processes for reporting on how money is being spent. So the administration to oversee spend was extremely inefficient, and it pulled money away from the purpose. Which was what we tried to address with the implementation we did. The first country that piloted the solution was in Benin in Africa, and what they found is that by using the solution, it was making the solution extremely accessible by having a chatbot in Facebook Messenger where I can submit my expenses as a school. As soon as it's submitted, that's when information is recorded on chain and then can be instantly checked through in the case of Via Don Bosco, about 6 different administrative checks that needed to be done by different parties, as it's a private and publicly funded NGO. So providing them a very efficient way to follow up on how money's being spent meant that around, I think it was around 10 to 15% of the funding that the NGO was freed up to go into the purpose, providing resources to schools so that they can improve the infrastructure of the school, order the materials they need to educate, and so forth. So I think that was an example that I think was a good one. The last one is more enterprise focused, and I brought a prop with me today, but we're working with AB InBev to provide the infrastructure, like the blockchain infrastructure that's needed, so that they can drive sustainability throughout the supply chain, reduce the carbon footprint of the supply chain, reduce the agricultural footprint of the supply chain. So basically, and that's the main purpose of the initiative is to reduce waste in the supply chain and also carbon footprint and agricultural footprint of the processes that they have. But of course, there's a nice consumer angle to it as well, when you can scan the QR code on the package, and then as a consumer, I've got full insight into the provenance of the product, and where did it come from. I can meet the farmer who produced the barley that went into my beer. So that one went live in January this year. About 6 million bottles of beer in the French market were sent with this package, so that consumers of the product could then check out the whole history of the beer production process, going through farming to malting to bottling and packaging and so forth. So but again, just to reiterate, there's a consumer angle to it, which is great for building engagement and building brand engagement in particular. But of course, the key driver for that is through time to be able to collect enough data so that more sustainable practices that are being, let's say, deployed with farms, with Farm One, that sustainable practice can be spread, or that more sustainable practice can be shared with other farmers in their very, very large supplier network of farmers that provide barley that goes into beer. And the aim is that by doing so, the more sustainable practices that are used by some farmers can be shared with others, and they can be incentivized via the same network that we're collecting the data with to adopt the more sustainable practices and ultimately reduce carbon footprint, agricultural footprint, and waste in the supply chain.
This sounds actually very cool, environmentally clear, blockchain-based beer. Thank you for that. I would actually like to go back to your point of getting rid of paper and address this with Aaron. So we know the example of Estonia. I've had a pleasure to interview an ex-prime minister of Estonia who actually got rid of all paperwork in his government and governmental services. So do you consider this one of the goals, a paperless future? And how does that increase, let's say, legal transparency?
I think, well, we did a what we called a listening tour, which was a kind of a customer focus group interviews that we've done now with law firms and financial services groups in 6 different countries. And one of the things that emerged was that there was a universal agreement that the future of law, the future of legal instruments is natively digital. Paper is useful in many ways, but it has some real limitations. A natively digital, legally binding agreement has the ability to self-execute some or many of its own clauses. It has the ability to guide resolution of breaches in ways that paper does not. So when it comes to legal transparency, is it desirable? I think the answer is clearly yes, especially in areas of the world that have public institutions that could function better, shall we say. Being able to offload some of that burden of responsibility into a digital self-executing agreement allows for an improvement in business environment. To give a couple of examples around, ESG, and let's not forget that, it's environmental, but it's also societal and governmental. Being able to, well, in our particular use case, improve the functioning of corporate governance is I think an important, but not necessarily a world-changing type of innovation. But when it comes to the ability for capital to be deployed in areas, especially having to do with infrastructure that desperately need it. I think where you can measurably, where you can measure the correlation between economic growth and societal improvement and the deployment of infrastructure. There you've got the ability to make real impacts. One of our use cases that we're developing now is with a US-based fund that is focused around public-private partnership in sub-Saharan Africa, primarily with regards to medical infrastructure. So there are many places, many cities in Africa that have the ability to pay on an operational basis for a new medical hospital, for example, but struggle to cover the capital expenditure instead. And so this fund is focused around solving that problem through a number of joint venture operating agreements in 12 sub-Saharan African countries. From the perspective of managing joint ventures in that many different jurisdictions, the ability to create self-executing joint venture agreements and operating agreements for those assets is a game changer for them. As well, when you talk about, Aiaze was talking about accessing smaller investors as a source of capital. One of our other use cases is in the renewable energy space. Actually, two of them that are related. One is digitalizing certificates around energy attributes. So somebody wanting to buy green energy, for example, is able then to buy the certificates of origin per kilowatt or per megawatt hour from producers using infrastructure that we provide in a way that's very different than how they're being done today, much more efficient. But then secondly, and I think quite importantly, is syndication of equity in project finance around solar deployment, around wind deployment, around hydroelectric or geothermal. These are typically large price tags. There are a limited number of institutional investors that are very conservative in their decision-making. When you're able to syndicate equity into more bite-sized chunks, then you open this up for smaller investors, family offices. You're taking ticket sizes for those types of investments out of the hundreds of millions of dollars and putting it into the single digits of millions of dollars. I realize that they're still big numbers, but ultimately it has the ability to greatly increase the use of foreign capital in developing countries. And that's an area that I think is certainly worthwhile for us as a company and the ecosystem at large to focus on.
Now, my co-moderator, Matthew, has another question for you. Are there ESG-linked indicators that go along the process of the private investment markets? But if possible, can you just keep your answer quite short, because we also have Rob to talk to.
Absolutely. Well, and clear, I mean, research is emerging. I mean, if you look back a few years.
Matthew.
Oh, was it for Matthew? I apologize.
No, this was from Matthew to you.
No, thank you, Matthew. Sorry, I apologize. No, I said there are data is emerging in the space, but I think if you look back a few years, there are some real parallels to be drawn. For example, with the penetration of mobile networks. You know, for every 10% increase in penetration in mobile phone, use, then there was a 2% increase in GDP or something along those lines. And I think when it comes to the ability to deploy capital into infrastructure projects in developing world, there will be some level of similar correlation. I imagine that Aiaze has got some real numbers in the back of his head. He's probably itching to share with us. But so I think, generally, yes, these are definitely correlated, but it always is going to come down to the details of a particular project. So it's tough to kind of come up with some overall generalities.
Thank you. Okay, Rob, here's to you. I know that you've covered almost every aspect of blockchain application that we can think of today during your work, but all in all, which industry application have excited you the most lately? And what are the emerging uses of blockchain that can be breakthroughs in accelerating progress towards SDGs?
Oh, wow, thank you for that. That segue. So I'm in the lucky position as a consultant to be able to see a range of use cases. And I'm also in an even better position as a technologist to kind of build where technology solutions where we can make most impact. And when we decided 3.5 years ago to focus only on SDG projects, we thought that would really limit our ability to find work, and it's been exactly the opposite. So using the rubric of the Sustainable Development Goals, you know, those 17 iconic areas, isn't very limiting at all. And then when you start thinking about the use of transformational technology like distributed ledger technology, and you know, I use that term rather than just blockchain, because blockchain has become a meme almost in itself for a variety of things. We're into a generation now of this technology, which is very different from that proof of work driven public Bitcoin-esque blockchain. We've got many ways of using this technology, as is the right thing to do, right? These things evolve. Bitcoin has its place, of course, but we can apply it to a full range, and we've talked about them already. You know, Matthew's mentioned provenance and supply chain. We've talked about fintech and applications in Africa and across the world, and the legal side of contracts and smart contracts, and how we maybe even DAOs, you know, decentralized autonomous organizations, where applicable. So I've used blockchain to create rural village financial ecosystems, you know, the Village Savings and Lending Association type model, the Grameen Bank model. I've worked with the Asian Development Bank to define this kind of fintech and lending group infrastructure across the whole of the South Pacific. We've developed security token designs for impact funds that have got built-in mechanisms for distribution that are specific to impact investors as opposed to normal venture capital. But some of my, and these are all my favorite use cases, of course, because I love them all. My particular interests are around financial inclusion and wildlife stewardship and ocean health. So what Plastic Bank are doing in terms of incentivizing the collection of plastic that is ocean bound, I think is transformational, and in so many ways, because it incentivizes the collection of that waste. It gives subsistence communities self-worth. It gives them a purpose, and it feeds back into the commercial supply chain, where there is a real desire by consumers such as us to actually do good, but we don't know how to do it. So you need those positive feedback loops, and these are the things that blockchains can provide, because at their very heart, irrespective of what generation of technology they are, they create, if created properly, they create three things: transparency, trust, and generally tokenization. And by tokenization, I mean this kind of digital twin of something that is either tangible or intangible in the real world. Once you've got this token, you can do all sorts of things with it. It's a programmable unit, which as a platform for innovation, again, what Ayaz was talking about, you can then inspire entrepreneurs to build on top of it. Because we can't think of all the use cases, we can't think of all the ways to apply this technology, but you can be certain that there are guys and girls out there who are thinking about these things, and they need the tools to be able to deliver in their cultural context, in the problem space where they're seeking to solve. So my belief is that we have a duty to bring the tools to these people so that they can build these solutions to the real world problems. I think infrastructurally, we need technology that can scale, that is private by design, is transparent and creates trust, but is also secure. And the first generation blockchains don't have all those things. We've got this trilemma, which is this inherent trade-off between decentralization and security and scale. But we're now seeing technologies that break those walls, and you don't have to trade off, and will scale. And once you've got scaling and tokenization, then you can start thinking about micropayments. I'm a payments guy, right? So this is my killer app on blockchain. If you can viably and commercially create infrastructure where you can send value across a network for sub-cent or in tenths of a cent, you're able to create new value systems, new commercial models, new business models that can utilize that in new and exciting ways. So I'm thinking about Internet of Things. I'm thinking about device-to-device transfers, delegated authority from one's digital identity to one's web of devices, autonomously and programmatically transferring value in a safe and secure and private way. And once you've got this infrastructure in place, you can create businesses in remote communities, you can create smart cities, and everything in between. You can build circular economies that are incentivized to create no leakage in terms of waste. And the ability to have supply chains that are supply loops and are zero waste supply loops are so applicable to developing world and communities where every resource is really, really important and generally wasted at the moment. So incentivization models, behavioral nudging in a good way, not in a totalitarian way, are all these building blocks and capabilities that we can then apply to things like the Sustainable Development Goals, because we've got the tool set to create next generation solutions and not just faster old generation solutions for the developing world and to apply to the SDGs. And that might be microgrids for transacting energy, or it might be going back to the plastic bank, ways of actually paying the subsistence waste pickers in a way which they can actually transfer. Or the migrant workers being able to transfer money home in real time and not having to incur the volatility of the crypto markets to do so. And then everything from micropayments up to CBDCs. So you've got your central bank digital currencies, which are hot right now, all on the same infrastructure. And some parts of it are private, some are public, but it's the same for all. So financial inclusion and those who are underserved by banks get the benefit of it as much as everyone else.
Thank you. Well, this is a very
futurist, so there's a lot of stuff in there.
Yeah, and very optimistic, and with a philosophical approach. So, okay, we have about 5 minutes.
Did Matthew have a difficult question for me as well? Otherwise,
yes, absolutely. I was just Matthew, if you have it, if you have the question in front of you can actually ask. Yeah, sure.
Yeah, and it's I think one of the things that financial institutions have will and should have a large role to play in driving sustainability. And I was just wondering if you had experience with so what in lending process, credit decision models, and all that, taking into account your sustainability measures, sustainable development goal objectives, and attainment of those. And funneling that into the credit decision process, and one of we're working on some stuff in that domain, and one of the challenges we're facing is that data to provide such information in an easy way for large corporates is usually pretty straightforward. There's companies like MSCI, Reuters, and Morningstar that offer APIs that will give scorings to tier 1 companies. However, what it misses then is any information or data collectible about their suppliers. So you end up with what happens between the entrance to the factory and the exit of the factory. You have a good view on, but what happened beforehand and what happens in the upstream supply chain and downstream in logistics is kind of a black hole. And I was wondering if you'd come across any. So my question was. Is there any, in your experience in banking, payments, and so forth, where are you able to, have you found any approaches to collecting information from either upstream from the producer or downstream, the smaller tier 2 type companies that are in some cases equally important to get an overall comprehensive view of how sustainable a process is. But that was the question. Just looking for tips more than anything is somebody else in the space. If you had any experience with it.
Sorry about that. If you could just keep it short, because we have a little over 3 minutes left, and I would also like give you a final round of a final round of questions to everyone.
Okay, so keeping it short, event-driven data notarization is a core kind of property, I think, of blockchain. So being able to write date-stamped, time-stamped events to a distributed ledger, I think, is key to this. That only works within a governance framework, doesn't it? So it works within a framework which is auditable and provable, and you can apply digital signatures. I've done this in supply chains, so I've done it for provenance of agricultural supply chains, where they exist within a regulatory environment. So you need to prove those, the paddock to plate kind of full supply chain flow. And the same would apply, I think, to financial products or any other corporate kind of product and service delivery. And within the normal ESG analysis, you've got some standards and governance frameworks to work within. So you've got sustainable accounting standards and the board, the SASB, the SDGs as well, of course. You've got principles of responsible investment and the United Nations Global Compact. So those are frameworks that you can build your analysis tools within to, and then apply that to supply chain and timestamp the events. That's where I would start.
Yep.
Thank you. Well,
that's more than 3 minutes.
Unfortunately, our time is almost over. So just a final word, Ayaz, what would you like to point? And well, what are the risks and opportunities and challenges for sustainable development and blockchain?
Yeah, I mean, that's a very broad topic to cover in a very short time, but I'd say some of the areas that I'm really focusing on right now, echoing Rob's and Matthew's comments, and that I'm really excited about is the potential that we have in using blockchain for broader environmental and biodiversity related challenges. For instance, in tokenizing the amount of carbon that could be sequestered by an elephant or a whale, or by tokenizing the amount of oxygen that's produced by a tree, and creating new markets for people to invest in these and put their money into these assets, which are really natural capital assets that are backing different, that are backed. I mean, it's different blockchains, sorry, that are backed by different natural capital assets. And I think there's a huge potential there. And perhaps I'll just end with a quick example to Matthew's point about how we can actually use some of these innovations in relation to biodiversity. One of the projects I'm focusing on in Uganda is how do you actually include biodiversity metrics into lending decisions to smallholder farmers that are responsible or that have responsible practices. And so one can start including into lending algorithms, satellite imagery on how they're deforesting or not around the farm and the plantation. You can include soundscapers, soil scanners, all sorts of data coming from IoT objects into the lending decision to really provide preferred loan terms and conditions to farmers that are actually respectful of the surrounding biodiversity. So there's a lot of examples and a lot of applications, and I think it's really exciting in the face of the most pressing climate and environmental biodiversity related challenges ahead of us. So very excited to have started this discussion with all of you, and I hope to be able to connect sometime soon.
Very well, thank you. Matthew, please.
Yeah, I'll keep it real short. I think for me, the sustainability and blockchain and where do they fit? I think the key thing to take away is that if you want your credentials as a company, as an organization, as a government to be very trusted, truthful, and most importantly, independently verifiable, then blockchain is a good solution. You can make all the claims, companies can make lots of claims, but for those to be audited independently by using blockchain for independent third-party verification of claims, that's really where the key difference is and why blockchain is adding value to this whole discussion.
Amazing, thank you, Aaron.
Dark, slow unmute button. I think, yeah, I mean, what Matt and Aiaze both said is absolutely accurate. I would just kind of go a little bit further to say that now we're in an adoption chain game. Now, at this point, it's about change management. It's about focusing the right energies at the right focal points to create these types of changes incrementally. And so, I guess my kind of final thing is, absolutely, the ability for blockchain and distributed ledger to impact the ESG goals for us in the coming years is profound, but we should start with smaller projects, stepwise. Let's not get lost in this gigantic pie in the sky in terms of what the long-term vision can be, and just start getting some wins up on the board.
Okay, true. Rob.
So I'll speak from the pie in the sky position then. No, like I said, I think foundationally we're putting in the rails now. So things like on-chain notarization, tokenization, micropayments. Those are the building blocks that everyone can use. The other key thing is interoperability. There won't be any single chain that everyone uses, and someone mentioned mobile payments earlier. The only reason that mobile payments scaled massively across Africa is when the silos, when the walled gardens were broken down. It's the same as when we were SMSing within our networks in the early days, and now we can SMS a new one. It's the same when the internet formed and we were kind of within our walled gardens there. So we're in that same state now. We're in 1994 in the internet, in the blockchain space, maybe 95. So once we start getting interoperability and it's transparent and it's smooth, then this whole space is going to explode and not be as constrained as it is at the moment with our blockchain tribal warfare. And it'll be for the good of all humanity, for my skybound pie.
And there is some tribal warfare between
there's a lot
camps,
of it.
I have to say. Yeah.
All right, thank you so much, Rob. Well, we didn't even get to discuss why enterprises are so slow to do it, to adopt blockchain and the Bitcoin energy consumption. Anyway, thank you so much, everyone. I hope we'll get to continue this discussion sometime later. Very happy to be connected. Very happy to have you all here. Everyone, please enjoy the rest of the conference. It's Africa Blockchain Week 2021. We have Ayaz, Mitha, Aaron Powers, Matthew Van Niekerk, and Rob Allen today. Thank you, everyone. I'm Olga Yaroshevsky. Happy to be here and have a good day, everyone.
Thank you, everyone.
Thank you,
everyone.
Olga. Thank you, everybody.